European indices are climbing to new highs amongst the bearish talk of imminent recessions. Gary Glover explains how this solidifies his outlook for the steady rise in markets with limited drawdowns. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
How does that look? It's the markets are climbing in some indices, and are you still seeing that we possibly have a shallow drawdown, if any?
Oh, it's amazing, yeah. So there's still, still so much pessimism out there. Still negativity, still underweight equities, still recession looming. Yet, if you start looking at some of these global indices, they're all starting to trade new highs. So, like a lot of the European bourses, the FTSE, the CAC, the DAX, they've gone to new highs. Europe's supposed to be having the worst recession. They're supposed to be in the worst, but they're moving to new highs. And we've got Asian markets, like the Nikkei has just gone to a new high here as well. So, there's quite a few of those markets looking pretty firm here. So this is not the sort of price action you're supposed to see in bear markets here, Chris. You don't see indices, which is baskets of, stocks and stuff, moving to new highs. Markets are actually sort of starting to break out here. So, I don't know. I mean, that's really sort of a big sort of sideways orientation there, and then we're breaking out to the top side here. If that was a stock here, that's the sort of stuff that we're seeing breaking out and kicking on here. So, the price action is certainly not as bearish as all the talk and all the rhetoric and all the sentiment that gets banded around the market here. So, as traders here, we just, our job is just to follow price action, let that sort of guide us here. And that's, at this stage, that's pretty constructive.
So constructive movements there on the Nikkei, the chart that you put into this week's report. If we jump on up to have a look at the first chart that you've put in here, this is the amazing one with the NASDAQ. Now, for some time, you've been talking about this cup and handle, which has been building for a few weeks now. You can see the handle here tight, and the last couple of weeks even tighter. So this cup and handle formed, it condensed and really compressed, coiled up under the high. And then, well, that's a pretty solid week last week. What happens from here, Gary?
Yes, I mean, we've sort of got that, so you've got the cup and handle. I mean, what you're actually sort of seeing there is you're seeing, price contraction. So basically the volatility getting narrower and narrower. So even with that, that Nikkei chart there, each pullback there got shallower and shallower and shallower. So that's like a VCP there, Chris, as well. And we're seeing that across all the indices. So basically price is just tightening up here. It's getting, each of the corrections are getting shallower and shallower. And then we're starting to sort of break up here. So that's the sort of classic sort of pattern we're seeing across a lot of the indices at the moment. So even the ones that actually aren't near, all-time highs are actually sort of starting to, form these sort of tightening patterns and breaking up here. So they're all pretty constructive sort of, price charts there. So nothing too negative there. I mean, if you look at all the textbook sort of stuff there, these are all quite bullish patterns here. So on that NASDAQ there, I'd suggest they were probably going to go back and retest that last sort of swing high there in mid-2022, which is, I think, around about 13.2. So that's probably the first area of resistance there I can see ahead here. So I think it looks pretty constructive there. It's probably not going to, this market hasn't been in a rush there. So maybe we just grind sort of higher there. But I just think you'll just sort of see that, upward sloping, channel there sort of, moving forward here. So I just think it's pretty constructive there. So nothing too negative here yet. I say still not seeing too much sort of, even the sort of stocks I'm talking about earlier, sort of, stocks will have a pullback for a day or two there. I'm just seeing no selling. The price is not, no aggressive selling coming through here. So, so the price action is sort of still pretty constructive overall.
There are some good charts for the individual shares that we'll have a look at in a second. But staying with those indices, you're talking about sort of this cup and handle with the NASDAQ, the Nikkei at highs. You were saying that some of the indices, even not near their highs, are still kind of showing decent price action. Is this what we're seeing here in the S&P, like contraction kind of again and compressing sideways?
Yeah, I mean, this is a little David Ryan thing here, is where sort of you get that tight congestion underneath the high. So you sort of go back and retest the high, and then you don't sell off. You just sort of hover under it. That's normally sort of pretty positive, and then you get a breakout here. So the S&P there went really narrow week, 2 weeks ago, just like a pretty much a little small doji there, hardly moved. So no sort of selling coming at all. And we had a bit of a move up there. We're just sort of sitting under the high here. So I think we have closed at a new high here, so which I view as being constructive. Hasn't sort of, I think it has closed just above the previous high there. So yeah, it's just, it's I know this market is not in a rush here, but price action is sort of pretty constructive here still. So yeah, so I don't expect it to sort of race off here or but these typically, these sort of markets, they sort of start off sort of slowly, Chris, sort of, put in a few high lows and they sort of build, and then they do start to sort of eventually sort of get a bit momentum there. You see that with sort of stocks there. I think Zero is sort of one that I've had in the portfolio previously, and that's sort of climbed quite nicely, been a bit of a leader out of that tech sector. And then he just keep making high, low, high, he's keep building, and then eventually they do sort of pop here. So that's the way the markets not often sort of work here. So at this stage, we're just seeing constructive price action there across a lot of the indices. So can't see anything too negative there.
And the Aussie, you're saying right in the report this week, struggling to move lower. And I'm going to quote you, which I think is a quote from Bill McLaren. And you say quite often trading can be as simple as counting. So what are we counting? Yeah. If I've got that quote right, I'm not sure.
Yeah, no, that's exactly right. So we've literally gone up 4 weeks, kind of impulsive manner, and then we've pulled back here 4 weeks, and we've hardly pulled back at all. We haven't even come back half the range, probably only about a third of the range as well. So really struggling to go lower here. I think, in the face of, we've seen there with the resource stocks there, so BHP, Rio, Riske, they've all sort of gone to new lows, so been quite bearish there. So it's a good sign there when some of the biggest sectors are actually struggling a bit. Even banks haven't really been that strong here, yet the index has actually held up pretty well here. So I just think that's a really good sign here for the overall market. So
if we've got those big stocks falling out, having lows, getting hit pretty hard, the indices are holding up. Is that implying that there's a bit of a transition happening within the market and somebody else is doing the heavy lifting?
Exactly right. Yeah. So you got other sectors sort of moving forward here. So some new leadership groups emerge. Yeah, I mean, the one thing I haven't seen so far, I haven't seen sort of small caps come to the party. So I see a lot of people talking about small caps here. So that, definitely, it's something to watch for there. But from my experience there, was sort of normally with sort of bull markets, it sort of starts with the big caps first, and then as after they've had a bit of a move, then people get a bit more risk adverse, so they start to buy some mid caps, and then when the market's starting to really sort of get going, and then they sort of start to really warm to the small cap. That's when their sort of window comes in, and usually the small caps really being aggressive and popping. That's usually the last sort of stage of that sort of run as well. So when all the small caps are going crazy, that's when we sort of got to be thinking, okay, well, we might be getting at the deep end of this bull run if the small caps are going nuts. So but it's just the normal cycle the markets go through. But I think the price action is pretty constructive here so far. I think it's pretty because if all those stocks have all come back, so the banks have all edged back here, some of those big miners have all edged back. If they have a bit of a bounce here and everything else sort of holds up, then you're carrying the whole market forward here. So so I think it looks pretty constructive.
Well, that's probably a good point to move into having a look at the trading shares this week. Going through your weekly report, we start off with Credit Corp CCP as a ticker. Love seeing in your reports FB, so the false break. It seems like the share price is toying with that old low. So what's the read on Credit Corp now?
Yeah, so look, sometimes when you get a false break, hopefully you get a fast move and then doesn't look back and just goes straight up. I've seen a few of those recently there, but sometimes they do build a bit. Even the sort of 360 did take a little bit of time to build there. But oftentimes I'll come back to sort of that support zone. So we can see there, just above that $16 zone there, that's sort of the left shoulder there. That is a bit of a key zone there. The thing that's really interesting, Chris, is look at the last 2 weeks. So even though we've had a bit of a bounce there, we've sort of pulled back here. The volume for the last 2 weeks is non-existent. So this is, I mean, it's sort of like, this is a classic thing we're just sort of seeing throughout the market there, is that we're seeing stocks pull back here, but no selling at all. So they're very, very light selling there. We are seeing lots of those false breaks too. We're seeing markets come back and retest the old lows and bounce them out. I'm just seeing so many of those across the board here. So, if you're watching a stock there and you think it looks sort of cheap here and it's getting near an old low, just wait patiently. Sometimes I'll come back and retest the old low, and then if they bounce from there, then that's the sort of signal looking for. So that's definitely seeing that pop up quite a bit there. And it's sort of, I think I mentioned in the 30-30 there, I think Steve Clark said something, do more of what's working in the market and do less of what's not, So this is definitely working in this market here, sort of stocks coming back and retesting ranges. And that's oftentimes it's sort of maybe in range-bound markets you get this, but we're just seeing a lot of stocks sort of edging back here, losing interest, and you're just not seeing big volumes too as well. So that's the thing. If you see those stocks drift back to new lows and you can't see any aggressive selling, it's usually when you see aggressive selling that when they go to new lows, they keep going. So not everything is going to bounce from a new low. What we're looking for there is sort of stocks that pull back on very light volumes. Avoid the ones that are actually selling off to new lows on heavy volumes. They're the ones that will probably keep going, go lower. So just something to keep an eye on in the current environment.
Well, another one that you've got in the report this week is SEK on the ticker. And this looks like it's really compressing and tightening up a little bit. So there's that pullback that it had earlier in the year, went for a sharp rally, and then the pullback's been a bit tighter. So what are you looking at on SEK's chart here?
Yeah, similar. I mean, it's sort of moving up, a couple of impulsive rallies up to that sort of $26 level. And then we've had a, really sort of, a bit of a congestion there, sort of come back. Had a bit of a bounce there, I think 1, 2, 3 weeks up to the, back up to 25.50 odd there. And then we've had like 1, 2, 3, 4 weeks down here and very little volume. So from that high, and the week followed, and even the 2 weeks, the 4 weeks sort of down here, there's just no volume through there, Chris. And then we did see the volume improve at the low there, sort of a bit of volume come in. So then, so again, it's just, I know it's not in a hurry here, but obviously we're getting, each pullback's getting shallower there, which is sort of kind of constructive as well. So yeah, as I say, it's slow moving here, but it's building here. So yeah, looks pretty constructive for mine.
Well, the next one you've got on the report is DGL, so DGL Group. What is this company? What do they do, and why have they caught your eye with this chart?
Yeah, look, it hasn't been listed that long actually, DGL. So I think it's got three sort of main divisions there: sort of chemical manufacturing, sort of warehousing, distribution. It is a bit of a scale-up story here, Chris. This is one that's sort of been acquiring other businesses, so does have a little bit of gearing. I wouldn't say excessive gearing, but there's definitely a bit of gearing there. But yeah, I mean, the last half yearly was, I think revenue was up 50%, I think, somewhere around 70 mil for the half. I think EBIT around 6 and net profit after tax was around 2. So it's not a huge profit there, but still profitable. So it's not running at a loss, which plenty of those companies out there. But it is a bit of a scale-up story here. I think the founder owns about 50% of his name, maybe another 15, 20% across sort of, other companies and other sort of names as well. So I think he's, definitely got skin in the game here, has been buying more shares over the last 18 months, which is interesting that someone with such a big holding already buying more shares. But again, it's just, we've really had that come back and retest the low, but the volumes have been pretty light through the whole period. And so nothing aggressive here. Just starting to see volume pick up a little bit here down near the low. So love to see them go back and retest the lows, go slightly lower, which it's done here. There's often a point where they sort of turn around here. So just, in terms of what's been happening in the marketplace, this type of price action has been very common. So I think this looks pretty interesting there. I think most of broker barrels are around about $2 to sort of 2.20 or something like that. So quite a bit high here. So yeah, look, got a little bit of risk there, but gee, I think this looks pretty interesting here, to be honest with you.
Well, the last one you've got for trading shares this week is ABC Adbri. Now, construction sector, we've seen a lot of news. We know that in Australia, we've seen a lot of liquidations happen, and half of them so far this year have really been from the construction sector, which has caused a lot of headlines. No doubt it's had investors thinking one way on it.
Yeah.
But as you're writing here in your report, there's talk around immigration. We've opened up the borders once again. There's a housing shortage. There's a rental crisis and so on. How does all that play in, and how does that catch your eye for the trade?
Well, we've just seen some of those buildings. We talked about them probably a couple of months ago, Chris, just sort of how, it was all doom and gloom about recession and housing sector there. But James Hardie, I think Lend-Lease and Boral there, they've all sort of rallied off those lows. So they're always sort of building quite nicely there. So ABC, actually, the price action just really tightened up here. So volumes are reasonably light as well. Sort of, there's a little bit of activity on some days. But I just think the whole thing is just the price action sort of narrowing up there in our little channel. And just over the last month there, got a nice little VCP, sort of from that sort of April. Yeah, so nice in there. We're just tightening up here. So price action is really, really tight here. So just looking at what's happening in that sector there, most of them are all sort of popping up here. And it's to do with a lot around, obviously, the fact that there is a bit of a housing shortage there. Everyone tends to look ahead. So it just looks pretty interesting here as well.
Well, that's a nice chart to sort of end and wrap the report on. So you've mentioned a fair few things in there. You mentioned sort of David Ryan's consolidation under the highs, VCP's false breaks. So that's sort of your trading playbook that you're consistently working through when you're looking for trades, is it?
Yeah, there's sort of strong technical patterns in their own right, but in this market, they're proving to be even more beneficial at the moment. So just, they're really sort of working very well in the current environment here. So, it's funny. I know sort of, you get a look at the fundamentals, of course, but I think when you're sort of in these sort of rangy sort of markets there, the technicals are definitely sort of shining through here at the moment. I just think it's really important, not everyone believes in charts there, but in my opinion, if you're not looking at charts there, you've got, one arm tied behind your back here in terms of trading here. It's just, even if you're a fundamentalist, you should be using, price action here to sort of time your entries and your exits as well. So just think it's a real sort of, I think it's a trader's delight here, although it's a bit tricky, bit of a slow moving market, not really getting that, not getting too many aggressive moves like we've seen, like with sort of 360 and 0 and stuff like that. But most of the stocks are just sort of, building slowly here, ebbs and tides. And so, we trade what's in front of us here, but I think the technicals are definitely sort of, are working pretty well, in the last 12 months. Hopefully they'll continue again. And that's, high inflationary environments as well. You definitely do seem to see more sort of range-bound trading and quite large swings as well. If you look at the 40s and the 70s when there was high inflation, those markets moved big. They just moved up big and down big as well, and had big moves within those periods there. So you think normally they're going to be dull most periods, and it's actually quite the opposite. Normally there's plenty of movement. So so far so good.
Oh, very nice. Well, that's a good point on those 40s and 70s inflation that you've talked about before. So we'll put a playlist on the right-hand side of trading strategies and that kind of research you've covered previously. We've also put in there, you've mentioned the 30-30 list, the Friday report where you work through the top momentum stocks for the week and the top ones on the launch pad that are poised and set to run with good movement in the week. And then we'll also put your Twitter handle on the left-hand side. So if people want to get in contact or follow you, that's the way to do it. And we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.